10th. We are live as 9 o'clock. Let's begin with a risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. Seems like there's some risk in the market now, as the market broke pretty major structure yesterday. Risk off trading. We'll see that when we look at the currency strength chart right now. Happy Friday, everybody. We did it. Let me check in, see how everyone's doing. Say hello to my little friend. Check in, see how everyone's doing. All right. Donna in the house. Good morning. Thanks, Donna. Always coming in with that smash that like button. Chris, how you doing? Marilyn, Jeremy, Denise, good morning. Nice to see everybody. All right. Currency strength chart. We have the yen leading the way. The dollar is also surging and chasing. New Zealand getting hit. Aussie getting hit. Cad coming off the lows, but still weak. The pound, the euro, the Swiss are the weakest this morning. Some decent volatility. I did protect some profit on the Cad Yen. I'm looking for more. The positions I took for the last 2 weeks on Cad Yen, I'm looking to take this back down to 103, or hopefully this pivot cluster 102.60 would be a nice little protection trade. And we'll see if this just breaks the trend line. I'm looking to add to this on the backside of it. So good thing is the pair is cooperating. We have a crazy amount of pivot clusters to the downside. I wouldn't be surprised if we do have some volatility today. So we could have this movement. We could come down and find some support with automated trend lines, pop back up here for a little retest, and then flush back down lower. Or if it truly is just risk off, like we're going to show the SPY is way down for pre-market this morning, futures are way down, that this thing could just be unloading to the downside. And so perhaps we have enough volatility today with risk off trading that we come back and find a bunch of these pivots and a bunch of these pivots, and we find this equilibrium here. We get back below 103, and I'm still looking to protect most of the position. So all in all, hopefully the Cad Yen will cooperate, but I did take some profit this morning. I was in at 106.50 and grabbed some profit around 104.85 or 104.90 this morning on my phone. That was the non-FIFO trade. So all in all for the week so far, and obviously it's not done if we have some more movement today. See if my FX book updated. It did. So looking at 1163 in pips this week, decent chunk of profit. I will certainly take it. And overall, just keep the high watermarks coming in, the new balance highs, and just pushing and grinding. Managing some trades. The euro disappointed this week, even though, I mean, the news yesterday with the ECB rate decision was, hey, the ECB is going to raise rates for the first time in a decade by 25 basis points next month. What's the market do to price it in? They sell the euro off. So news today, the big news that's going to be focused on is the CPI news, and it came in higher than expected. So lo and behold, it's going to be another risk-off type day because, oh my gosh, inflation is crushing, which it seems to be. So if we go to the, I'm going to check out the fear gauge and stuff too. So let's go to the E-mini futures on the S&P. This is 39.62. We are pushing down to fresh lows this morning. You're going to see that with pre-market trading on the SPY, 396. So I wouldn't be surprised if the S&P is going to flush down this morning even more. Okay, the SPY pre-market is pushing lower. E-mini futures is already pushing lower. So most likely the indices will catch up once Wall Street opens in 25 minutes. We're going to see what these bears are made of. If they come out with claws a swinging, then perhaps the bears just take this thing relentlessly to the downside today, and there isn't much of a buy the dip. In fact, we might just come back down and retest the lows. And, you know, I could see some support holding here and see if this 20% correction stabilizes. But it might just be, you know, one more push, one more threat by the bears to take some profit. So we'll see how nasty it gets. The good thing is it's Friday. So Wall Street's going to close at 4, Forex closes at 5. So we can just kind of see how bad it gets. If there's profits to be made, let's do it. Let's protect those short-term bear profits if it continues. And then we'll digest it over the weekend and get ready for another busy week next week, which next week is a busy week. Here are some notes from my trading room for equities on demand. This is just to get us prepared for everything we've got lining up for 6/17 expirations next Friday. So we have lots of covered calls, handful of credit spreads, but today's class at 10 o'clock, we're probably going to talk about some potential assignments or taking some long puts and then getting ready to have a pending assignments next week. Stocks like, and again, stocks we want, I wouldn't mind being in Alcoa. I wouldn't mind being in CLF, in X. Kraft Heinz, if I get called away on that one, that's consumer defensive. But $38 covered call looks like it's not going to get called away today. Pfizer $54 covered call looks like it's not going to get called away. IP 46.28. I've got a 47.50 covered call. Looks like it's not getting called away. So I have done a pretty good job just drilling the cost down on those particular stocks because they refuse to get called away. So I will just keep preparing. But looks like we have a bit more pain ahead. The VIXM. Let's take a look at this. So we're at 34.36. We're kind of elevated. I was hoping that with our recent recovery in the stock market that the VIXM would come back down into $31 or lower. That isn't the case. So I'm not jumping on this one yet. I do think this is a good instrument to be long on. Not necessarily right now at 34.38, but if we do come back into this $31 or $30 area, I do like the VIXM for some plays. Buy low, take profit there. It's about a $4 area. So I mean, if it was $4 reset, $4 reset, $4 reset, I would throw 100 shares of that all day long and make some money. Maybe every couple of months, every month possibly, if it offers up. But I need to see a dip back here to $31 or smaller. So credit spread maybe, long calls maybe, just depends on what the fills are. But I'm watching this one. VIX. We're up from yesterday's sell-off. We will probably be up again today if the stock market continues to slide aggressively. The question I'm asking on the fear gauge is, are we coming back up to these highs? Because even though we saw that huge correction in the Nasdaq and we tapped that 20% correction in the S&P, we did not make higher highs as the stock market made lower lows in the fear gauge. So consumer sentiment is at like one of the lowest levels we've had in the last 50 years, which I can understand why. It's like people are kind of freaking out. The market's really uncertain. There's a lot of volatility. There's like things to get excited about, things to be terrified about. Yeah, it's tough to maintain some optimism out there in the trading world. Okay, so anyway, I'm watching this VIX. If it cracks the highs, I'm long VIXy. I'm trying to get long VIXM, but I want to see the SVXY. See how this is pairing today. This is 49.33, looking to sell off. I have a $46 put for next week. I might end up taking some profit on that today to get some margin back, just get rid of that naked put, even though I wouldn't mind being assigned there at 46 and change. I'd own the shares at 45.40, which is at a fresh low. Probably not a bad spot to do it, but I currently have shares at 50.87 with a cover call at 55. So I don't necessarily need to take on more shares of the SVXY. I'll see what that 60 cents credit is trading for today. If I could close it for maybe 20 cents or less, maybe 30 cents or less. I don't know. I can always get back in. But that would free up some margin as I go into next week because I'm going to need it. I'm going to need it going into next week's 617 expirations. All right. So let's talk little Pulver report style. Let's do dollar index, oil, gold, silver, some cryptos. Dollar still getting some bid. So the trend line's not breaking. If we don't have a double top, take a look at the weekly chart. So this is the US dollar. We had that COVID high back in March 2020. Perhaps the dollar index is looking to retest this recent high in March, possibly retest this COVID flash crash high from March 2020. And we will see. I meant May, not this is a May high in the dollar. So we might test that high from May. We might test the March high from 2020 with that flash crash. I still think from the overbought, oversold alignments that even if we test this high in price, I am looking for some hidden bearish divergence right there to see that the dollar will still correct a little bit. I know that may not be a popular thing. I know that everyone's like, oh, the dollar's going to get stronger. Sure, it could. It has been. You have to remember, everyone was bearish on the dollar back in 2021. I was not. Dollar has done nothing but rally. So now everyone's bullish on the dollar. I am not. I'm looking for some tops to form. I'm looking for some confirmation. And I'm looking for that price action to support this resistance will hold. If it does, dollar corrects, we make some pips. Okay. All right. Interesting. Okay. Good. Yes. So that's dollar index. Taking a look at that. We'll watch and see how we close today. It looks like we have dollar and yen strength. Yen is still leading the charge. Dollar's backed off a little bit. We'll see what it does. This updates every 5 minutes, so I'll be watching. Wall Street's opening in 20 minutes. And we're going to see where this kind of unleashes and unfolds for today. Like I said, if we have enough risk-off trading today, I'm watching those yen pairs closely. Some of my yen exposure, like Swiss yen, is dropping nicely. Cad Yen dropping nicely. We've been talking about it all week in Flex. Just look for some trend line breaks. Okay. In fact, I'm going to put a little sell at these highs, 137.50. Put a little tiny sell trade up there in the Swiss yen. So get a little trade size action in there, 37.50. That's going to be a sell limit, 137.50. Okay, so the high from what I have on my platform is around 137.70, 137.75. 137.50 is fine. That should get filled if we retest. We have some good bar counts, some good extensions. We're looking for a 4-hour trend line break, and hopefully it is pretty simple. We break this trend line. Look at this nice weekly candle. Loving this weekly candle so far. Nice indecision. And if we have a bit of an evening star that's going to form going into next week's trading, that would be fantastic. I, for one, would love to see this year or the Swiss yen dropping all the way back down to 130, dropping all the way back down to the lows at 128, putting in a substantial topping formation. So this is the trend line that I'm talking about right here. Okay, so let's look and see if we can roll over this trend line, break this trend line, find some pivots perhaps, maybe even find the EMAs. That's a leg lower. Look for a retest. Look for a push lower. Look for a retest. Look for a push lower. I'm going to see how this can unwind over the next week or two. Okay, if this unwinds, if the JPY is consistently the strongest currency pair over the next week, again, we could still see weakness in the Japanese yen in the medium term. But in the next week, if we see strong JPY, you're going to expect to see a lot of volatility and some terribly bearish moves in the stock market. So that could be the feeling of it's April all over again. You know, I don't know. I don't know if that's the case. I don't have a crystal ball. But what we do see is when the yen is strong, it tends to be very volatile, and there's a lot of bear flags. So if we have, breaks to the trend line, look for a bear flag or a pullback to sell. I'm going to be actively looking to take some small trades, scale in on something like Swiss yen, look to get my position on Cad Yen all finalized here. I don't need big targets or anything like that. If Cad Yen cooperates with a little bit of equilibrium, like here, this is a good trend line break on the 4-hour time frame. We talked about this all week. If I go into my line break charts, hopefully I have them here. Yep. So Cad Yen 4-hour. Here's a Cad Yen daily. Here's a Cad Yen 8-hour. We have officially turned red. We've turned one on the 4-hour time frame as well. So 4-hour line break has occurred and confirmed. 8 hours confirmed. The daily would have to break back below 104. So the 8-hour and the 4-hour obviously turning a little bit earlier. But so far the confirmation is there. So I'm looking to stay with it. So we break the trend line. If we get a bounce or a pullback, I'm going to sell it again. So I've taken some stack trades to the upside. 103.50 is probably my worst position. And then I did enter this week, if you were with my newsletter, pulverreport.com, the newsletter, 106 was a small entry. 106 was a small entry. We had a pending sell at 105.50 that we're also in. Okay, so the 106 to 105.50, if you wanted to take profit on that, you totally can. Okay, I still think there's more downside. I think we can go high to low, little flag, push down again, come back and find this pivot at 102.50 or lower. If we go lower than that, fantastic. Okay, there's 4 daily pivots in a row here as well. So wherever you protect profit, obviously do your thing. But I think a break, a flag, or a break, a retest, and then one flush lower, find some equilibrium here. I like this 102.50 target for profit. But if you're in at 105.50, you're in profit. You're in at 106, you're in profit. If you get antsy and anxious with those profits, protect it now and close it. You're up 100 pips on the 106, you're up 50 pips on the other. Take 150 pips total and walk away. Not that hard. You can always get back in. Bring it on, says Daniel, right? Bring it on. Bring it on. All right, that's Cad Yen. Let's go oil. Oil is sitting at 121.39. I'm seeing a lot of traders out there that are, well, I should say more like wealth managers, fund managers that are like, oil's going to 200. I get it. I think that it can. I also think that we could at least have a wave cycle in here. This high, this low. We had this aggressive flush back down. Oil is making its way back up. Okay. I don't know what's really going to force the turn. I really don't. I mean, right now it seems like OPEC's increasing output. Okay. Oil goes up $10, right? U.S. is putting more reserves, a special petroleum reserve, and they're pumping the market. Oil goes up, right? So it's like there's not really been a lot that has been bringing oil prices down. And I don't know what would cause this resistance to really hold. I don't. I did read last night that China. I'm gonna verify this. I'll find that StockTwits email from last night. Let me see here. I think they just started locking down Shanghai again. I I I think that's what I read. Maybe I was making stuff up, but I don't think that's the case. So let me go to China. Nothing. That's not true. Let's see. ECB. Every sector. Chinese equities remain in focus. BABA fell 8.13 as Shanghai re-implemented lockdowns as regulators squash rumors of an Ant Group IPO. DocuSign fell 20.75% after hours after beating. Yeah, so positive earnings on DocuSign and it still fell 20%. That's the market we're in right now. Electric vehicle maker NIO fell 7.5 after topping analyst estimates. So yeah, beating expectations and falling 7 to 8%. Beating expectations and earnings and falling 20%. Thanks a lot, stock market. Right? So that's the dealio. Yeah. So we'll see. Oil resistance at 130. If we break 130, then it's fair game to just run up to 147, which is the high from 2008. And then we're talking about potential threat, parabolic crisis. Again, we talked about this a lot in Equities on Demand in the trading room, in the flex trading room. I'm just saying, don't be surprised if we have $200 to $250 oil. And the reality is, it'll be $200 to $250, and then it'll be $50 probably within the next 3 to 5 years. And it might go to zero because the next 3 to 5 years is going to be such a forced adoption to go green that it's going to be, I don't know. I don't want to speculate, but it's bad stuff, right? Like, but there's a saying, high prices beget high prices. And this will force the innovation and adoption that we've all been talking about. Carbon emission, carbon neutral by blah, blah, blah. You want green technology? How about you make carbon technology unaffordable? That's one way to force adoption, right? So just saying, if it happens, we talked about it. This is why I am allocating some positions where I'm long energy, oil, gas. I kind of hate the fact that I am because they're kind of worthless companies. But they can do no wrong with oil prices being this high. And if they keep going higher, why not make some money on it? All right. So that's oil. Gold, silver, let's take a look. With the dollar getting stronger, gold and silver probably not making the moves that we want as of yet. We're going to have to see if that dollar index holds the highs. So gold is pushing back down a little bit lower. We still haven't broken any massive structure. I like gold up towards 1900 plus. Hopefully more. Just depends on, this is going to have to be a dollar move. Silver, same thing here. Silver is pulling back. I think next week we have a 2050 by 1950, which we're in profit on right now. Actually, we're not because it's SLV, not the actual XAG. So we have a 2050 by 1950. We're trading at 1984. So we are inside the strike prices right now. If silver goes down, I would consider either pushing this credit spread out, which we can talk about today or next week, but probably pushing it out, maybe getting ourselves more time. And if we collected, 50 cents or so on this credit spread, we can maybe take a 10 to 15, 20 cent debit, something like that. Keep some profit running and push this out a little bit so we don't have to take assignment next week. So we'll talk about that. But again, dollar moves to the downside. Gold and silver should be reacting nicely. Bitcoin is at 29,583. Last night I hosted a trading battle. Austin Silver and Nick Syak. Great pugilists. Good conversation. And I believe Austin was short Bitcoin at the end of the night. He was also short S&P 500, which is looking great this morning. So he might be taking some nice profit for charity. And then Nick was long dollar yen. And so far, I think from his entry, I'm not sure how it was on the smaller time frame, but he might be doing just fine too. So let me look and see when this was last night. So by the time we were in our session, that's 3 a.m. So last night in here. Okay, so we're doing around 9 p.m. He was in here for a little jump. I don't know if he closed profit or not. If he got stopped out, it would have been, I don't know if his swing was that low. So 134, that swings down to 133.20. I'm not sure. I don't recall where he put his stop loss, but hopefully he hung in there for a nice little gain to the upside for his charity. And then also he was, what were the notes? What else did he get into? He was long CAD Swiss, I think. Let me check on that. CAD Swiss. same kind of situation. Again, flirting with his stop loss. I'm just not sure if it held. So I think he was long in here as we started the session last night. That could have been, I don't know. It depends if he was watching it. That was up from 77.20 to, I mean, that's 30 pips to the upside if he took it. Otherwise, it's going to be flirting with that stop loss, but still back in profit if he's hanging on to it. But that was fun. By the way, I would encourage you to check that out. I mean, you go to thetradingbattle.com. They have these battles every week. So I have been fortunate to host a bunch of them. Or I think it's just tradingbattle.com. Thetradingbattle.com. Oh, that's not it. Yep, the Trading Battle. There it is. So every week they have traders, crypto, indices, currencies, all sorts of stuff. Sponsored by 8cap. Team does a great job. It's a lot of fun. I've been on there. I have a 2-1 record, and I've been a host pretty regularly as well. So good stuff. And 8cap's a fantastic broker. So if you're interested, check it out. Okay. Any other currencies you'd like me to take a look at? Any stocks? I have a whole list of them. And here are some notes. We're going to review this today in class. We might be looking at rolling out some credit spreads, repairing some covered calls, watching to see how things go today. We might also discuss, like we did yesterday, some strangle, some bear call spreads maybe. We might look at something where maybe we can take a bear call spread, lower our position on the stocks we own. Rather than constantly buy dip, buy dip, buy dip, which is fine, but it also might help to get a bear call spread going for a week and see if we can take some profit going into next week and lower these costs. Pound CAD, all right, good. Thanks, Luke. Luke's always coming in with a recommendation or a request. I like it. Pound CAD. So I think if we talked about Pound CAD anytime this week during the trading rooms, I'm still long in the Pound CAD. I still love the daily divergence, which is right here. So I'm not sure why my momentum oscillator is all jacked up, but this is what I'm looking for. So we have recently made fresh lows in price, but I'm showing disagreement with momentum and some hidden bullish divergence right there. So again, what's the factor? I do think that oil needs to peak and drop. If oil peaks and drops, then pound CAD should go higher, at least for recovery. Okay, Eurocad should go higher for recovery. Dollar CAD turned the corner this week, and I'm actually really mad at the dollar CAD because we had what I thought was a pretty decent setup, which was buy the thing at 24.50, 24.60, and it came down to like 25.12. So then I looked at it trying to figure out, okay, is this a sideways channel? Is this kind of a diagonal channel? It just flat out didn't come down to the levels we wanted. So I felt like we missed the trade opportunity on dollar CAD, even though we had the direction. It's up to 27.80. We want to buy it at 24.50. So to answer Luke's question, pound CAD with the divergence that I see on the higher time frames, I'm looking for this. We could have a flush down here, flush down here, flush one more time. I'm looking for a bit of a falling wedge, and I'm looking for pound CAD to recover. Okay. Also, I'm looking left on the chart between 5,300 and 5,000. Pound CAD is back to historical lows. So I'm still willing to hold some buy trades down in this area and get back in and then look for some confirmation to add to some gains. Because if we've broken these recent levels, that means that this is where price can come back to. This is where price can come back to eventually when we do put in a low. So I'm just looking at the bigger picture, trading it, buying low, hanging on to some trades, trading small, and building some positions to look for, divergence to hold and see the market pop back up. Okay, so that's my pound CAD, and that should correlate with Eurocad. Hopefully that correlates with Cad Yen as well, which I'm watching on my MetaTrader 4 screen right now. So pound CAD can drop all it wants today, and I will be watching very closely to the 103 handle, which is a previous high. I'm also watching that 102.60 level, which is a nice little pocket trade and a weekly pivot target with a cluster of a bunch of pivots as well. So if it really gets nasty today, great. Hopefully we can make some nice profit and protect it. All right, that's pound CAD. Eurocad, same thing. Eurocad is retesting lows. I'm looking for this to consolidate and continue. So we're making some, equal lows in price. Okay, we have some equal highs. And so I'm either looking for this to consolidate a little bit longer, or if this breaks and goes lower, I'm going to start looking for some type of falling wedge and some trendline behavior. Now, it could be as simple as this. We had a bit of a fake breakout right here. This might go down, retest the lows. If it consolidates here and then goes back up, I'm trying to take it back to range highs around 3,800. So we are in some trades. We bought it at 34.45 and 3400. We are still positive on that trade, but I'm looking for 37 to 37.50 on the upside. Okay. Jawan says reloaded dollar CAD 2664 too high. Reloaded as in what? Like you're closed out and then you're buying back in, or are you in and still riding those profits? I mean 26 and change, like that's fine, but I also like. Are you if you're looking for a reload? I understand. Um, but see what I'm saying? Like, why can't you come down and find support? That's what was driving me crazy. It's like we have support right here, support right here, support right here, support right here. It's like, come on, man. 2450, 2400. But we turned at 25 and change. So that is really bothering. Like, that bothers me because there's really good structure down here, and yet the market's like, nope, we're not going to get there. And it turns and goes up. I mean, this is almost a 300 pip turnaround, and it's straight up in 48 hours. So that's a lot of volatility where clearly there's some fuel behind that move. No pun intended since it involves the CAD. But it could have, come down to a much better logical level and buy support at 2400. But it didn't, so I missed out. But if you're in, okay, so you close your short, you bought your long, got it. Little flip flop there. So if you're in at 2664, great. I mean, if you're in and you're riding these profits, move your stop loss to plus 50 and let it run, man. I mean, if this thing wants to run, we come back up to 29 to 3000. Great. Grab a plus 10, plus 20. Meaning like if you don't want to watch it, move the stop loss to break even, lock it in, lock in 10, 15, 20 pips, let the market run. Put on a trailing stop loss if this thing wants to go ballistic to the upside. Target 130, I like it. 29.50. Look, we tap 3,000 right here, but again, I tend to target good enough levels. 29.34 to 29.50, good enough. 3,000, that's great. But we've been 29.13, 29.30, 2,900. Like 2,900 is great. 29.50 is awesome. 3,000 ideal, but I'd be trailing stop losses and trailing profits into that level. Okay. All right, good stuff. Chris is asking for New Zealand Swiss. Okie dokie. Let's take a look at that one. New Zealand Swiss trading at 62.89. I have a pending order down here at 61.05. That's it. I'm just leaving it there. I'm going to see if this just corrects, choppy, choppy, choppy this way. Let the chop continue. Hopefully this heads back down. And if it does, I'll buy some down there and I'll take it back up to a range high. That's it. Okay, speaking of, I'm going to see what my Aussie Swiss is doing right now. Aussie Swiss, still pretty messy, it's pretty choppy. Ooh, all right. Cleveland Cliffs, 2050, 2010. We're getting some gaps there. All right, so equities on demand traders, we are going to be talking about some long put potential. So there's a big drop in materials right now. 1991 on CLF, we have a 23 by 22. We have a 26 by 25. Let's see how, I'm telling you, like, maybe the market gaps lower than fills, and it's just something we, okay, it fills. But I don't think this is going to stop going down. I think that, after yesterday's close and yesterday's scare, there's enough momentum just to unwind. And if this comes down to this level, guess what? I want to own lower. So I wouldn't be surprised if today's market is going to look like this. This is the heat map from yesterday. It's pretty awful. Hemorrhaging markets yesterday, lots of 3+% sell-offs. So if we get this again today, I think we're going to be in great shape. Literally all these alerts. I know you can't hear these bells, but it's driving me crazy. Delta, IP, CLF, X, all these are at fresh lows, and I'm looking to manage some long puts in the process. These are all stocks that I want to own. Okay? So I'm going to let them flush a little bit lower. Let's see how ugly things get today. And probably by maybe late morning, I'm looking to cash in on some long puts. Okay. How bad do they get? We'll find out. But if I own, a steel stock in this, I mean, if I can drill the cost down here to $18 or $17, I'm totally fine owning shares there and hanging on to them. Same thing on like Delta Airlines. Okay. Delta Airlines, I have a 41 by 40 credit spread. It's trading at $36. If this flushes any lower, again, looking at some long put, looking at some ownership here, let this thing come down to these alert levels and let's grab a $7, $8, $9 put, So I put in here Long put credit at 975 is still pending. If we get it, that means price is going to be down here in the low 30s. So I'll wait. I'll see. Maybe we have a big gap lower today and the market fills the gap. We could just have a ton of volatility. It's like the market is a bit on the crazy side. That's a big gap lower on the SPY, isn't it? I mean, look at the E-mini futures. It's a massive candle down. Look at the SPY. It's a gap lower. So we gap lower. If we stay bearish on the day, okay, we stay bearish on the day, we might have enough to fuel this Thursday sell-off with another draw or another push lower on Friday. We come back and revisit this level, but I'm telling you, this gap with the volatility we've experienced, this gap is probably going to get filled with another rally. But what we're noticing is the rallies are still making lower highs, and that has not changed. So that is the one thing that's concerning. Like, where's the bottom at? Well, we're either going to force and carve out this low and stabilize here at this 20% correction, or this market is going to try its best to keep making lower lows. And if it does, look left on your chart, and we could be coming back to pre-COVID highs, which is around a 30% correction. Here's the weekly chart on the SPY. Okay, if we keep pushing lower, look left on your chart. This 30% correction from the highs is a pre-COVID high, which is where I see the next big structure level. So if I measure this to that pre-COVID high, that is a 29% correction on the SPY. That's a big one. That's officially bear market territory. I mean, if we're 30% in the SPY, we're probably going to be close to 40% in the Nasdaq. But there's no reason why the market can't go lower. I mean, there's enough crap to worry about right now. It could get way worse. So I would say this is why we trade Forex and we trade stocks and options. We lower our cost basis. We have the ability to trade bear call spreads, long puts. There's all sorts of stuff we can do. Okay. Dana says some crypto regulations coming soon. A tremendous amount of money will come into the market. Maybe. Regulation, should be a good thing, but I think where the big money comes in is, I don't know, when it's a retirement offering, like what Fidelity's doing with offering Bitcoin exposure on 401ks. I mean, that's something. So 58.47. Oh boy. So Coinbase is back below my covered call at 60, which I take that into next week. Which again, it's okay. I can still continue to repair. The premium should be decent, but I'm just preparing for a lot of red today, a lot of ugliness. Let's see if we can grab some major profits. If you have any look, I'm telling you this, it is a good thing right now to have kind of a hedged portion of your portfolio, meaning you can be inherently bullish with the historical, averages of the markets, right? If you buy stocks long term, you buy companies that make money, the value goes up. Okay? But if you look at the US indices compared to other world markets, our markets seem broken. I mean, no chart should look like this. In the history of earnings and growth and everything that is, everything's holy for investments, no market should look like this. In fact, no market does look like this. You look at like the Hang Seng, anything in Europe, you look at the Asia markets, European markets, no market looks like this. You look at the Nikkei 225, the Japanese market, it's still 30 years off its highs, right? 1989, the thing peaked. It hasn't been back since. So no market has done this for the last 14 years, but the US has. So, I mean, again, there's no rational reason for the market to hold and keep going higher, higher, higher. So I think that this great run is now at the expense of, we kind of manipulated the gains, we kind of propped up the market, we kind of made funny money a thing, and we just put too much money in the system. And now the reality is setting in, and it could get ugly and get really ugly. And we could come all the way back to pre-COVID highs, and we could come all the way back to freaking COVID lows. And the market doesn't have to do anything other than what I just said. It can do whatever it wants, And if it's going to really shed from this 2009 low to this 2022 high, guess what? If this is the low and this is the high, maybe the market's going to find some footing back in here. Like 50% of the last decade plus of earnings and growth, it's just wiped away. I mean, we're in the type of environment where that can feasibly happen. So don't for a second think that this market has to buy the dip. Look, quality companies that make money, that have a competitive advantage, that have cash, that have low debt, that's who you want to own. And lower your cost basis, use options, own it. Drill the cost down, repair your trades. But there's going to be a lot of stocks that don't recover from this. If you have tech stocks that are 80, 85, 90 plus percent down off their highs, those at best are buyout targets. I don't see recoveries really happening, you know? Dollar yen, yeah, so several positions on dollar yen short. Looks like it's starting to consolidate in the 4-hour time frame. True. Let's look at dollar yen for a second in the higher time frame. Dollar yen, again, the hard part about the dollar yen is, look, it's good. It's a good place, right? The monthly time frame, we're coming back here to 2002 highs, which haven't been seen in 20 years. The way that it's moved since the breakout of 116, the breakout above 117, 118, it has gone parabolic, 2,000 pip moves. I looked at it yesterday. And what's interesting, we have these spurts, right? We have these super strong irrational spurts, about 2,000 pips. Super strong irrational spurts, about 2,000 pips. Super strong irrational spurts, about 2,000 pips. That's where we are now. From 110 to 135, that's 2,500 pips. And one could argue it's pretty irrational. So in the near term, if technicals are going to behave, I could see the dollar yen at least pumping the brakes a little bit. And even though it's like, yeah, the dollar yen might go to 150, it might, okay? But I think that we hit, 134, 135, and we have a big indecision candle that might give us a 500 to 1,000 pip swing, where if you're a seller, you have a chance to protect some profit. It really just depends on where you're positioned, how you're scaling in. So I'm not asking for big, crazy, ridiculous, corrections or reversals. I'm just looking at, like, can this thing just stop going straight up for a day or two or three and give us something to trade and make some profit? Okay. Gas needs to start dropping. Yeah. I mean, you could get an electric mower, right? Go with the ego. Plus they're quiet and they don't smell. But yeah, we'll see what happens on the end crosses. Today, yen is still strong, dollar's still strong. So it's interesting how the risk off flows aren't including the Swiss and they're not including the euro. But it's dollar and yen are getting the safe haven bids. So it's interesting how that's going to play out. Anything else for today? It's 40 after. We got 20 minutes. Equities on demand. We'll have a little session today. We're going to talk about some long puts. I'm going to talk about some potential, ownership prices next week on the 17th. We'll assess the portfolio. It's going to be a super busy week next week. And yeah, let me see how this currency strength plays into some of our trades. So we protected some profit this week on CAD Swiss, protected profit on dollar Swiss, which is still running, by the way. I hope we get another chance to enter. I'm trying to get back in on pound Swiss if I can reload. Euro Swiss, I'm staying in. It was kind of a disappointment on Thursday with the ECB and the euro got weaker. So this was yesterday's currency strength chart. The euro had a very volatile morning and continued to give way while the Swiss got stronger. So I did lose some ground on my dollar or my euro Swiss position. But, yen is cooperated a little bit yesterday, cooperating today. So I'm going to do my best to take some profit here in the next. Really, it's like if this carries over into a violent red day today, we'll see where things are at. Maybe there's enough volatility to really, flush out some of these trades and rebalance. We'll watch. Set a lot of chart alarms. I'll be around the charts all day, watching my prices. If I can take profit on Cad Yen, close position, Swiss yen, I'm watching. So always at the ready. It's nice to have those chart alarms so you can use your phone if you have to. All right. If no other questions, no other charts, pound CAD, we did that one, Doug. Pound CAD, I'm looking for a long position. I'm trying to stay long on pound CAD, but it's a small position. Here's the monthly time frame. All I'm doing on pound CAD is buying here, man. I'm buying here, and I have pending orders to buy here. That's it. So there's small area buys. So if this level holds, I'm looking to see it pop back up for range trades. If it comes back down here, looking to trade the range. That's it. Nothing crazy. So I'm just going to buy low. We go back to early 2000s. I know that, there's no guarantee these lows have to hold, but if we have at least a stall in oil, that should help pound CAD at least pop back up. I think based on what I see on the daily time frame, weekly time frame, and even the monthly, where we're at on pound CAD and Eurocad, I'm looking for a little pop and relief to the upside to trades and ranges. So my target on pound CAD, I'm currently long. My targets are on 6,200 or higher. Okay. So if it goes lower, I'm still going to buy it at 53, and I'm going to buy it at 5,000. I'm willing to take that trade down a little bit. Right? So, yes, thank you, Edward. Appreciate it. Donna, thank you. If you would be so kind, everyone, smash that thumbs up button for me. Like the channel. We have about 60, 70 people tuning in today live. So if you hit that thumbs up button for me, support the channel, help the algorithm, let YouTube see that we have some good saturation of likes and engagement, and appreciate all the comments. Okay. I'll be back next week, Monday. Monday guarantee, Friday possibly. I might just post a video on Friday. I've got family coming into town, friends staying with us Wednesday, family in town that I haven't seen in almost a decade. So it'd be nice to see them and host them. So that's Thursday, Friday, Saturday, Sunday. But we will be back on Monday. We have a super busy week in the trading room. So flex traders, get ready. Equities on demand students, get ready. And yeah, again, always trading, always grinding. Process equals profits. And there's a lot to focus on. Cool. All right, thanks everybody. Thanks for being with me. Equities on Demand students, see you at the top of the hour in 20 minutes. Everyone else, have a fantastic weekend. Go watch Top Gun. Go watch Jurassic World. Get some laughs in. Have something to look forward to. Okay, see you Monday. Thanks. Bye.